Good morning. Today is Monday, October 31st, the last trading day of the month of October. And we'll bring this particular month to an ending tonight. And we are going to look forward to November. And November is going to be likely to be another very eventful month, okay? Because we have the midterm election scheduled on November the 8th. So do watch out for that date because that day is also a blood moon day, meaning to say do expect something extraordinary to happen on that particular day. Now, over in on Wall Street on Friday, we can see that the Dow Jones Industrial Average continued to charge higher, 5 days in a row, continuing the momentum from the previous Friday. That means a fortnight ago, we can see that the market actually started to rally and it continued non-stop for 5 trading days last week and to charge into a new high. And in fact, it has taken out the September high. Remember, all this while I've been talking about the September high being very, very crucial. The high was 32,504. Now, backtrack a little bit. Now, we must all remember at the end of September, the Dow Jones Industrial Average actually registered a new low for the year, okay? And the change of fortune was very abrupt. Not only did the market not continue to decline, it has actually managed to reverse, and not only rally, it has taken out a September high. So technically, that is a very bullish sentiment, okay? So the key here is whether it can stay above the 32,504 in the Dow Jones by the end of tonight's trading. If it can, it means on the month-to-month closing basis, it is likely to stay elevated going into November. However, like I mentioned, November the 8th is the midterm election. Whichever party wins the election, the result will not be unanimous, in the sense that no party will be happy with the outcome, and that could be the catalyst for even more unrest in the United States. We already saw last week report about Nancy Pelosi, the Speaker of the House, husband Paul Pelosi was attacked brutally in his own residence. So this is just a symptom of how toxic the policy and the politics in the US has become. It has become so polarizing. Their supporter may actually do extreme things like what we saw in January the 6th when they stormed Capitol Hill. Okay, so it is not impossible this time. Everything is possible, especially after the result are announced on November the 8th. The result, like I say, will not make anybody happy. In fact, it will cause likely even more civil unrest, and that could actually jeopardize equity markets. So do watch out. Although the Dow Jones Industrial Average has actually crossed beyond September high, do remember this is a bear market bounce. Okay, it is very aggressive, very similar to what we saw in middle of June. Mid-June, we have the market registering a new low for the year, and then it has rallied for more than 2.5 months, all the way to 32,281. Okay, and then it abruptly reversed position trend and just come back down to take out the year low. Okay, so right now we are seeing very similar move, okay, post mid-June to August. Okay, we can see that the move all the way from here, okay, rally to 34,281. This move right now, it looks like it's replicating itself. So this year, the market, although it's coming down, it doesn't come down like a waterfall. It's coming down in fits and starts. It go down and then it has very violent counter rally, come back down, counter rally again. So this is likely to be the trend going into 2023. Okay, so do watch out. Over in the S&P 500, we can see that most of the rally in US equity market has been centered on the Dow Jones. I have always mentioned the global capital flow as a result of the continued rate hikes by the Federal Reserve that caused the dollar to strengthen so much to the point whereby all the other major currencies has actually depreciated. Now, fund managers has actually been shifting their funds over to the United States. And once the money reaches the United States, it's highly unlikely to be sitting idly in their checking account earning interest. They are already parked in blue chips, and this is just another evidence. Why is it that the Dow Jones break the September high and the S&P 500 and the other equity index has not? Okay, in the S&P 500, the high on September was 4,119. The highest it traded on Friday was 3,905. So we can see that with only one trading day left, it's highly unlikely that the S&P 500 can actually surmount 4,119 to close beyond this level. Okay, so by and large, we can see that the rebound in equities in the States is more concentrated on the S&P, on the Dow Jones in the blue chips, when you contrast that to the other equity index, it's very, very clear. Capitals are being parked in blue chips for safety, not for the yield, for the safety. So this is a market that is underlying fundamentals are all wrong. Okay, it is likely to come back down again. So the next critical date we want to watch will be November the 8th, the day when the election is being held in the States. And once the results are out, I think, like I said, nobody will be happy. Okay. And this contrast is even more glaring when you compare to the Nasdaq 100. Nasdaq 100, yes, it closed Friday on the high, but it did not close beyond the week's high. Okay, unlike the S&P, although it did not challenge the September high, it at least managed to close on the week's high. Okay, however, the Nasdaq 100 did not. The week's high was actually on Wednesday at 11,681. Friday we have a rebound, but again that rebound did not surmount last Wednesday high, so we don't talk about even September high. It's even further away. September high is at 12,752. So this is the market that is the weakest link. So once the rally in the US equity started to lose momentum and started to come back down, this will be my choice index to sell short. I want to go and sell short this particular index because it is the weakest link. Okay. Over in Hong Kong, we can see that this morning the Hong Kong market continued to slide. We are already at the year's low. Okay, this morning we have a high. We have a new low at 14,597. So this is a new low for the year. So the Hong Kong market is actually very, very bearish. It looks like it's going to topple over. It is already toppling over. The thing is that will it accelerate to the downside? So the key level to watch will be this level, 13,319. 13,319 is we have 2 more months to go before the end of 2022. If the market closed below 13,319 by the end of trading in December, it means going forward into 2023, this market is going to sell off big time. Okay, so do watch out for the Hang Seng Index and this particular level of 13,319. Over in the mainland market, you can see the Shanghai Composite continuing to slide. This morning, it gaps down a little bit and is currently trading below the 3,000 level at 2,891. So we can say that this is also spilling over into the mainland equity index. So the CCP 20th Congress, although it has ended, I think the market participant, the sentiment is pretty bearish because they feel that we see President Xi Jinping consolidating power and only his inner cabinet members are all from his own camp. They don't like the idea of they don't feel that this is going to be progressive enough. So they have been unloading all the Chinese stocks, including those listed in Hong Kong. So we can see that the sell-off in Chinese equity is getting to be a little bit serious. Now the year low is at 2,863. This was achieved in April of this year, and it does look like this level cannot hold the line. It's likely to go under the 2,863, and maybe over the longer term, it may be targeting the 2,700 points, okay, which is this level over here. Over the Nikkei, we have a bit of a bounce this morning, but it has yet to take out last Wednesday high. Last Wednesday, we have a high of 27,578. This morning high, I see, has it taken up? This morning high of 27,577, just a little bit below last Wednesday high. So yes, it is holding very well. And if you look at the 60 minutes time frame, which is this 1 hour time frame, you can see that the market is basically being held by this near-term support line. And I've always maintained my target at 28,000. So it looks like maybe this week, maybe over the next 2 days, we can see this 28,000 level actually materialize. Anyway, between 28,000 to 28,500, I think this will be an area of opportunity. This will be my target range. Over in the currency market, we can see that the dollar has rebounded again. I mean, not rebounded. It has actually bounced. Okay. Overall, we can see the market high this year is just under 152 when it come under BOJ repeated intervention that brings the dollar yen down to as low as 145.10 last Thursday, and then it has stabilized and started to creep up. But I think there is one more leg missing. it's very likely that we may see another slide back to ideally 144. Okay, 144 will be my ideal level to see this market slide back down. Once this is been done, of course, we got to see generally the dollar is retreating. Okay, can we see in the other currency pair? We have to take clue from that. But based on dollar yen, I think it does look like there is another leg down that is incomplete. Okay. Sterling, we can see sterling has been very well bid, and that is also another sign that the dollar is actually doing consolidation in a corrective pullback. Okay, so unless the sterling collapse, it is highly unlikely the dollar is also collapsing. It's also coming down at the same time. So mostly when dollar comes down, the other currency stays up. So in this case, for sterling become very big, especially after the elected Rishi Sunak as the new UK Prime Minister. So the market is basically very firm. Do watch out. The high last week on Thursday was 1.1645. It may be a case whereby I think it will go a bit higher. Okay. Where I think it will go, there's a potential for 122 too. 122 is a very far target for me. Okay, if you look at the higher time frame between these 120.60, ideally 122 is where I think the market is likely to top up during the next during this phase. So if this being the case, the dollar is expected to continue to retreat. Okay, in a technical pullback. Over in dollar yen, euro dollar have a different structure. Euro dollar, it does look like it has already hit its immediate peak. Okay, so market went back to parity, slides back down, and now it's below parity again, 0.9945 there about. We can see the market is pulling back, and if this market going to be for it to continue to rally, it will probably unfold as a more complex corrective rebound. Overall, this market has hit its target, like I said. Okay, we have a three-wave rally, which my target is parity. The market hit parity, now comes back down. So we have to see what unfold next. If sterling is likely to continue to charge higher, it may actually take along the euro for the ride. Okay, but by and large, we have to watch. Technically, we have already finished a very simple three-wave rally to parity and pulling back. So we have to watch. Okay, if you want to buy, you do remember this is a currency that is over the long term likely to go below parity and stay below parity. Okay. Aussie, we also have very similar structure. We have a three-wave rally. Market top side is about 65 cents and a half, and the market went high to a high on Thursday at 65.22, and it kept there and started to pull back. Very similar to structure as far as the euro dollar is concerned. Do watch out this particular coin here. This particular pair here. Over in in crude oil, in the WTI, we saw a massive rally from $76.25 all the way to $93.64. Now, it is my opinion that this rally here is not over. Okay, currently the market is trading within this very narrow range of prices. Yeah, there was a moment it actually perks above this channel. Now it's pulling back to the mid-range here. The low traded on Friday was $87.08. It is very likely, I would say, that the market will struggle all the way higher, even to take up $93.64 to hit to, at the bare minimum, $98.60, ideally $100 per barrel. So I think this round, $100 per barrel is going to be the price to beat. Okay, because this rally here is currently seen as a counter trend rally, and it may be kept at $100 thereabout. Okay. Over in precious metal, we can see that the gold has actually pulled back. Very similar to the outlook for crude oil, we can see that the low traded this round, okay, in September 28, held above $1,600. It held above $1,614, rallied to 1,729.5, and then pull back again to retest this level, managed to hold, and then I think this overall has the potential to rally all over again. Okay, and but it looks a bit messy right now. Maybe it's just basing and hoping that it will go up. Now on the lower time frame, like the 1 hour time frame, we can see that this level that we that held the market this week, $1,637.20. It held on Tuesday, it held again on Friday. So maybe it will continue to hold out this level, and then from here it propel higher. But by and large, the structure of this rebound is not it's not very neat in a sense. Okay, I don't like this structure because it doesn't tell me that it is going to rally in a very, very big way. Okay, uh, that could happen in the silver market. Silver market had basically hit my price target on $19.75. It went up to $19.78 on Wednesday last week, and then it pulled back in the three wave. Although it has broken the short-term support line, we will have to see. Maybe this is the completion of the first zigzag. Maybe we see another more complicated corrective rebound. Okay, by and large, I'm still bullish on silver for the reason that the dollar is currently pulling back in a technical pullback, and that should give the excuse for precious metal to rally. Okay. Over in the crypto space, you can see that crypto had it good last week. Crypto actually mostly rallied, and we can see the market actually rallied to a high above 21,000 briefly on Saturday, and now it's pulling back below 21,000. Currently, it's trading at 20,500 levels. And I do not believe that this rally is over. And there is possibility if the market can go back and test, ideally the 20,000 level, maybe that will be a base for it to propel higher, ideally into 21,500 or 22,200 levels. This will be my ideal level. Okay, so let's watch. I think there is one more last push higher to complete this sequence of prices before we see a more significant pullback. Okay, over in Ethereum, I think the market is even stronger. We can see that this rally from 1,155 is very, very persistent. It has so far gone up to a high of $1,662.80 on Sunday. Now we're having see a minor pullback. And for this, I think at the minimum, I think we should expect a pullback to $1,542 or $143, $1,543. Ideally to 1,480. Okay, ideally this will be a good level for it to base to it to push higher. Overall, I think there is still a lot of upside potential for this Ethereum. Now, if you look on the higher time frame, okay, this is a higher time frame. This move here may actually result in the market taking up $2,031.56 to perhaps as high as $1,300. No, 2,000, sorry, I keep on getting my number wrong. $2,300. Okay, so this will be my ideal target over the medium to the long term. Okay, so there is a lot of potential for Ethereum. Do watch out for this particular point. I'm very excited about Ethereum because although I have no position currently, I'm waiting for that a more decent pullback. Okay, I refuse to chase. Ideally, the market can come down to 1,480, and that will be a more realistic level for me to position. Over in Ripple, okay, the market has not gone up very significantly relative to, let's say, Bitcoin or even Ethereum. The verdict between the SEC and Ripple Lab is still unknown, but most people feel that it is almost at the closing stages, and we should get the result, very, very soon. Okay. Yes, currently market is backpedaling to 45 cents. And over the longer period of time, you can see that this is actually another market that you can actually consider to establish long position because it does look pretty bullish to me. Okay. Maybe not the, let's see the daily. You can see the market has actually stabilized at 28 cents, 28 cents. So the highest it been was just under 56 cents at 55.82. Okay, and now it is consolidating. This consolidation, if you look at it in the lower time frame, like let's say the 4 hours, you can see that the market is obviously consolidating in a potential triangle pattern. Okay, you can see the highs are getting lower, the lows are getting higher. So potentially this is where the market is going to do. So long as it doesn't break $41, 41.7 cents, okay, there is a potential for a very violent rally, okay, especially if the verdict is positive for Ripple Lab. So this is still a very high possibility trade. The market can right now is sliding down. So long as it doesn't go below 41.70, I think it is right for a very impulsive and explosive rally. Okay. Over in Cardano, we see that the market rally has not been very sustainable, purely because I think the catalyst is not on this coin. Ever since Elon Musk managed to take over Twitter, one particular coin has been in focus. That coin is Dogecoin. Okay, Dogecoin has since the last 2 weeks has actually rallied 44%. Last week alone, it actually rallied 16%. So it is the Dogecoin that has actually underpinned the meme coin. So basically, I think we can see that although the Cardano has not been going significantly higher, but I think it has been the bullishness in the Dogecoin actually spilled over to the other altcoins, including Cardano. Okay, Solana actually has a much better structure than Cardano. It does looks like it is likely to rally higher. My target is $35.34 to $36.31. Ideally, this market is where it hits to, and from here, I think it may actually be capped, and we will see the next phase. Okay. Binance coin is also doing very, very well. Binance coin from the low of $256.70 actually rallied two, uh, 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 very significantly to 300 and just under $19. Now it's pulling back, and at the bare minimum, I do expect market to pull back to $305 to $300. So if this is the bracket of prices, then it's ideal to take a look at seeing if we can actually position a long position near the $300 levels for the next push higher. My immediate target is $337.40. Okay, do watch out for this one. So that's it. Remember, this is the last trading day for the month of October. November is likely to be another very eventful month, and do stay on the outlook because there's going to be a lot of movements. Okay, so until tomorrow, I'll see you. Bye bye.